Welcome to Bears in Exile. Today is July 14th, and this is the weekend market overview. Looking at the Dow SPXX. We're looking at everything we always look at. All right. Well, Friday was an incredible rally day. JP Morgan came out, and the news said that everybody loved it. So away we went. And it did massive technical damage to the bearish cause. And here it is. Awesome. 203 points to the upside. Just an incredible rip your face off rally to the bears. We weren't happy with all of these tails that we were having. We knew that the 60-minute was due for a bounce. The daily looked bad, and this all by itself wiping out almost 4 days of losses in one fell swoop, and closing back above the long-term moving average bar and coming close to the upper price consensus level. Wow. It did a quite a number on the indicators, as the daily doesn't look so bad anymore. We have a tiny little blip in the heat map about a possible topping area very, very early. It was able to turn around the CCI, definitely turned around the stochastics. We already saw that the fast was ticking up, and we didn't care for that. Further up on the RSI, up on the histogram, up on the MACD, very close to a bullish cross. 14-day RSI moving average going sideways. Wow. Very impressive. Which isn't to say that the bears are finished. I mean, you could say, oh, we're going to blow out of here and make a new high. If you do, then we'll have even more negative divergence in the daily, and it'll catch up eventually. But as it stands right now, you could see the stochastics go all the way up here to the top to meet the 14-day RSI moving average for its move down whenever that happens to be. And you could see the same on the CCI and the RSI, but I don't think that you'll see it in the histogram or the MACD. There's no way that they're going to bust out of these two highs, I don't think. But I could be wrong. In the 60-minute time frame, there it is. Wow. Huge move up instantly, and just floated on higher throughout the day. Indicator wise, it is mixed. They have some indication in the heat map. We have the CCI moving down, we have the stochastics holding high, 14-day RSI moving average getting underway to the upside, down on the RSI by the end of the day, and really flat on the MACD histogram almost the entire day. Very interesting. And the MACD itself ticking up. So, could there be more up? Absolutely. 14-day RSI moving average says so. Does everything else look, really healthy? No, I think that it's more likely to get some kind of negative divergence. But anyway, it's early. It's mixed. And for the moment, it is more positive than negative. Back to the daily, SPX. And this one, very similar to the Dow, eliminating 4 days instead of 3 down days, all in one fell swoop. We have a blip in the heat map, up on the CCI, up on the 14-day RSI moving average, up on the stochastics, up on the RSI, up on the histogram, up on the MACD. It's looking for a bullish cross. This is a pretty nice looking daily chart. It certainly does. And any difference in the 60-minute time frame over the Dow? No. It's exactly the same, even with a slight, ever so slight downtick in the MACD histogram by the end of the day. But yeah, RSI down, CCI down, everything identical. Moving right along to the VIX, we were playing around with this possible flag or channel, which it very, very quickly broke down out of. It did not make a new recent low. At least there's that. So yeah, this absolutely looks like it'll be a retest, maybe even a break of the new previous low, which is normal, which is healthy. We can see it putting a damper on the CCI, diving down along with the stochastics. We had seen the fast already ticking down the day before. Sideways on the RSI, down on the MACD histogram to 0, and down on the MACD itself. Not an attractive chart. And of course, price-wise, back into the 16s. Here we were really needing to get it above 20 for the bears, and absolutely not even getting that close. That is a close above it, not just a pierce, which it didn't get a pierce either. We certainly have a darker area in the heat map, but it's not bright red yet. It's just deep orange. And 60-minute time frame. Look at that. Woo! Boom. Ugly. And it dumped right at the end of the day too, which was pretty darn impressive, losing $17 massively. We do have a bottoming area in the heat map. 14-day RSI moving average heading down. CCI ticking down by the end of the day, thanks to this. Stochastics pointing down. RSI going sideways. And would have been sloping up, but we got that dump. So down on the MACD histogram. Actually, very slightly positive divergence. That's probably shouldn't even think about that, since that can be busted out with just 20 cents to the downside. So, and down on the MACD histogram. Ugly 60-minute chart. Absolutely. You can see the excessive separation and everything in the short-term moving averages. So is this a bit overdone? Yeah, I think it's a little bit too stretched, but everything is in alignment for more to the downside. So not to read into that too much. And TNA. Not overly impressive, price action wise. I mean, it had a gap up. It was definitely positive for the day. It looks like it could be a bounce off of the long-term moving average bar, which is normal, even though that we had the really nice kiss of the upper price consensus level. This one, in the past few videos, we kept noting that the 14-day RSI moving average had continued to uptick, even through this area right here, and that didn't make sense. Well, now we have the fast stochastic pointing up, CCI pointing up, RSI going sideways. MACD histogram is still, it's a downtick today, very slight, and the MACD histogram is a very slight downtick as well. So could this be some kind of a weird head fake? Yeah, it could be, but yeah, most things are pointing up, so I'll have to say that a little more to the upside would be fine and create some negative divergence. Oh wait, no, I'm sorry, we're probably not going to break out of the recent high, so actually it wouldn't be that. But anyways, nothing like the Dow or SPX. I mean, if it had been that, it should have been at $55. So, and it didn't even pierce that. But anyway, we will see. We will see. 60-minute time frame. Is this sucker overheated? Well, we can see the move up. Notice that instead of just going straight up with the melt up like the down SPX, it actually kind of rolls. That is different. We can see the CCI ticking down by the end of the day, along with the stochastics, along with the RSI, along with the histogram, and the 14-day RSI moving average and the MACD itself are still ticking up. Much weaker than the Dow and SPX. Let's see, UUP. Very interesting. We'd made that new recent high on Thursday, and very bearish on the market. Had a move down Friday. It did give us a downtick. Downtick target is about 2283. So a little further to the downside is definitely in order, definite possibility. Fix this bubble, be natural, needed, healthy. Downtick on the MACD histogram, still an uptick on the MACD itself. Down on the RSI, down on the stochastics, down on the CCI. 14-day RSI moving average is still moving up. So the question will be, how far should it go to the downside? We already know, 2283. So we'll see if that happens, or if we get some news which puts a different spin on everything. If it does break out of the downtick target, continues down, we have this line which could definitely mean something. We have the long-term moving average bar. We have the major price consensus level. It should not break right here above 22.7. By the time it gets here, they should all have some kind of convergence. So still have the middle Bollinger Band below everything. Very interesting. And FXE, the euro. It's hard to tell if that's a uptick or not. Man, that is like an uptick on fumes, but I will follow it anyway. Yeah, it takes us up to about 123.20. Very slight uptick. And yeah, we still have that bottoming area we've been talking about for a week. 14-day RSI moving average just getting under the way to the downside. Stochastics trying to turn around here, the fast pointing up on the CCI, up on the RSI, up on the histogram, and down on the MACD itself. So a mixed chart, more bullish than bearish, especially with the uptick. But yeah, could you get a little bit of a move up, similar to this right here? You go up halfway, roundabout, turnover, entirely possible. So we shall see. And here we can see this this trend line, which could mean something, and it coincides with the lower price consensus level, and it will with the start of the long-term moving average bar if we have a powerful move up. So good level to have. 124. ComQ, the NASDAQ. Closing above the long-term moving average bar. That is bullish. Had this nice hammer thing that went down and kissed the major price consensus level on Thursday. 14-day RSI moving average is going sideways. Stochastics are mixed. CCI up. RSI sideways. Sideways on the MACD. And sideways on the MACD histogram. For all that juicing, it was only able to really turn the fast stochastic and the CCI. So very interesting. I guess the news is really going to matter, but absolutely a positive day. Yeah, why not? 60-minute time frame. Is this one overheated? Notice that this one, unlike TNA, actually did continue the complete move to the upside today, whereas TNA had that little bowl looking thing. Kind of interesting. You can see the downtick on the CCI, downticks on the stochastics, down on the RSI, and very slightly down on the MACD histogram, up on the MACD, up on the 14-day RSI moving average. Very curious. Very curious. And moving on to XOI, oil. Yeah, oil, like, to me, looks more bullish than most things. I mean, it was a very positive day, but we were always inside the long-term moving average bar. Never, I mean, we closed outside of it once, but essentially we've just been in it for a week, and now we've popped out of it. CCI up, 14-day RSI moving average up, stochastics up, RSI up, histogram up, MACD up. This one looks like it's in better alignment to me, and its positioning is better. So if it wants to go up and retest this high, that's fine with me. Do I think it can break out of this and break out of the 200-day moving average, which is just a little ways above it, all in one go? Probably not. But anyways, that's my feeling on it. And I didn't mention on the from a pivot perspective, this was a great save for the bulls. Maybe this isn't the greatest chart to do it. I'll go back to the Dow. You know, we were in danger of busting out of the previous floor, which would have been a possible confirmation for a returned down move, that being pivot low, pivot high, higher low, higher high, higher low. If this had broken this, you would have had you know, a lower new recent low, and then presumably a higher low. So this was a really good save. I think most likely some kind of shenanigans involved, but yeah, we did have lots of days of red, and we needed a green reset. So now if this were to turn around and actually go out and take out the low, whew, terrible bearish sign. But anyways, just theory. And Apple. You know, very interesting. Through this entire move down, every night I was saying, Apple didn't do so bad. Apple didn't do so bad. Apple didn't do so bad. And its move up wasn't that great, which is very curious to me. It ended with a spinning top. It did a bubble corrective move, which is great. We have the 14-day RSI moving average going sideways. The stochastics are still pointing down. CCI up, RSI sideways, down on the MACD histogram, and sideways on the MACD. This is questionable. The way everything moved, this should have been, you know, above 610, easy. So I'm not sure why it would behave this way, but it certainly gives me a question mark. And GE, try to get a better read on the Dow. You know, it didn't have a bad day. It should have been above 20. Big fat body spinning top, almost getting to major price consensus level, backing away. Nothing in the heat map. Down on the 14-day RSI moving average, mixed on the stochastic, sideways on the RSI, up on the CCI, up on the histogram, down on the MACD. While this one certainly is more bullish than bearish, especially since it cleared the long-term moving average bar, it is not the strongest looking chart out here. And since this leads the Dow, is this a good sign? I would put a question mark on it. And JP Morgan, what we're told moved the entire market on Friday. And certainly, it had a really positive day, clearing the long-term moving average. Clearing the major price consensus level through a gap, which is cheating, but it did not clear the long-term moving average bar. It's very close to the 200-day moving average. It's had problems with that in the past. Is this really healthy? I kind of don't think so, but it's a good move. What the bulls would not want to see at this point is pivot low, pivot high, pivot low, pivot high, and then a new pivot lower low. It is possible. 14-day RSI moving average going sideways, CCI up, stochastics up, RSI up, histogram up, MACD up, attempting a bullish cross, but hasn't completed it yet. And I should have looked at GE's 60-minute chart, and I didn't. But I'll look at JP Morgan's. And this did follow the Dow pretty darn well. Massive up and up through the rest of the day. Massive warning area in the heat map. Look at that. CCI down. 14-day RSI moving average going sideways high. Stochastics ticking down. RSI going sideways, holding high. Sloping down on the MACD histogram. MACD still pointing up. This is a questionable chart in the 60-minute time frame, but I would say that it has more problems than good things going for it. Just my opinion. And moving on to XLF. JP Morgan was up so big, banks should be up huge, and they were. This one is, in my opinion, better than JP Morgan. Not really too much of a warning in the heat map. CCI up, 14-day RSI moving average going sideways, stochastics up, RSI up, histogram up, MACD up, and it has cleared the long-term moving average bar. That's the big difference to me, and yeah, I think that's important. And it's closer to its recent high, and it doesn't have a 200-day moving average to screw around with up here. So yeah, this one looks pretty darn good, and definitely the warning bells in my head do not go off with this one like it does with JP Morgan. And 60-minute time frame, yeah, look at that. JP Morgan had some red in here. Yeah, there's one here, but overall it's just a straight shot. And look at that, the indicators are different as well. 14-day RSI moving average still has room to move to the upside. Stochastics ticking down, CCI ticking down, RSI ticking down, histogram ticking down, MACD still ticking up. This is a questionable chart in the 60-minute time frame. This could be deeper green for the warning area, but it's still decent. We do have some topping tails here, so there might be some resistance here. Actually, that lines up pretty darn good with this gap area right here. So maybe that just wants to go up and fill this, and then it'll look different, but we just don't know that yet. And what else is there? Oh, how about my little monster? Here's my little monster. Very positive day, and totally destroying this possible reversal area. 14-day RSI moving average up, stochastics holding high, up on the CCI, up on the RSI, up on the histogram, up on the MACD. Whew! Little beast. And 60-minute. Wow. It's gonna have to break this top here just to try to get to this bottom down here. Down on the CCI, rolling over on the stochastics, up on the 14-day RSI moving average, down on the RSI, sideways on the MACD, up on the MACD histogram. Questionable, but wow, momentum on this one is just a beast. So hope I don't have to dump that one soon, but I'll wait a little bit longer, just a little bit. And oh, gold, of course. This chart still doesn't say anything to me. They now have a gap here. Try to get into the long-term moving average bar. It's pushed away. 14-day RSI moving average moving down. Stochastics mixed. Up on the CCI, up on the RSI, up on the histogram, up on the MACD, and above the lower price consensus level. But it got rid of its bottoming area in the heat map. So, and it's far away from its recent high. I still don't like it. It's in the middle of the box that has existed for so long, right smack in the middle of it. Still don't care for that chart. SLV. This one's even worse than gold. We don't have a good green candle. It pierced and did not close above the lower price consensus level. 14-day RSI moving average going sideways. Stochastics mixed, up on the CCI, sideways on the RSI, up on the histogram, up on the MACD. Yeah, it does have a few things going for it, but wow, candle-wise, not impressive. It has this new recent low that we put in. I kind of think that it'll be retested, but yeah, we'll see what happens after we have some more development in the indicators. And I think that's about it. Oh, I'll just point out, I haven't done a Vegas baby in a long time, but maybe I'll do one this weekend. But MGM, the heart of Vegas, wow, look at this thing. This thing's been destroyed with a new recent low. Terrible. 14 days still has all kinds of room to move to the downside. Stochastic still pointing down, up on the CCI, sideways on the RSI, down on the histogram, down on the MACD, and we're not even bright red in the heat map yet. So, wow. At some point, this will be a really awesome buy, but we'll see where it goes first. Just amazing how low it's gotten. It was up at oh, look at that. Wow. Anyways, that's it for tonight. Very interested in what Monday brings. And as always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.